Hello everyone, happy to have you with us today. I'm Wendy Falk and I'm here with Stewart Willis from Asset Preservation Tax and Retirement. Stewart, it's great to have you here today.
Thanks, Wendy. Great being here.
Stewart, let's talk a little bit about how are your clients feeling about the market and what's happening right now?
Well, depends who watches what channel, right? And so I think what we're seeing right now is our clients in general that have been with us a while have been communicated with, pretty well. We've really enhanced our communication. We've doubled our communication to all of our clients to make sure that, when we're seeing these kind of fluctuations in the market on a daily basis, 3-4% up and down, that's crazy. Those are weekly or monthly changes, and we're seeing those daily now. So I think right now, our existing clients don't have that kind of volatility because we're in a very defensive posture right now with most of our portfolios. So we don't believe this is the end of it. We think that there's rockier roads ahead. And for that reason, we're in a somewhat defensive posture. So if the market really sinks, quite honestly, that'll benefit our clients long term. So what we're seeing is a big rush in from clients that we've talked to over the last couple of years where we've made recommendations and they just said, look, we're going to give our existing advisor the benefit of the doubt. We're going to hang in there. And they've just ridden the market straight down. And, everybody knows you buy low and sell high. The problem is they're being sold that we're low right now, right? And I don't know that we are. I don't know that we are at the bottom of this thing. So it's really important to make sure you have perspective where we are, not just over the last 3 months, but where are we over the last decade? We're really high in the market right now relatively. Is there still more room to drop? Absolutely.
I'm sure they're really appreciating your guidance at this point in time. Wouldn't you say that that's what people are really needing during the time of we just have so much change going on?
Yeah, it's interesting. I'm seeing that people that we're getting, our new clients, are just so hungry for communication. They just really want somebody that they know is going to be there for them, that will talk to them, that will talk them off the ledge if something's going bad. People make irrational decisions when they have no information, and I think information is key. So no, it's been great with the advent of all the technology we've been taking on for the last year or two with virtual meetings, Zoom, WebEx, all of those sort of technologies. It's really made it easy to communicate with clients. This is about the time our snowbird clients start to leave town. They'll, head back east, or we have a ton of clients in Canada now.
Oh, okay.
And so now we have relationships with clients that, that never wanted to leave their previous advisor because that was their hometown guy. Well, now they can communicate with us year round, even with those snowbirds, and it's made it just tremendously efficient with communication.
Well, that's great to know.
Yeah.
Communication and technology is great, isn't
it? Absolutely.
Well, Stewart, let's talk a little bit about how people can reduce hidden fees in their portfolio and how you can help them with that.
Wendy, that is the most important thing, in my opinion, in finance is understanding fees. Oftentimes when a new client comes in for a portfolio analysis, we do a really deep dive, a portfolio x-ray. We look at every aspect of their portfolio. And what they're surprised about most is their fees, because everybody knows that we get paid to do our job. But oftentimes when I ask clients, hey, or prospective clients, when I say, hey, what are you paying? How much is it costing you? I don't know. They don't have an answer. Or, I don't think he charges me a fee. Well, understand, I love what I do for a living, but I wouldn't be doing it if I didn't get paid to do it. Exactly. And if you believe your advisor is doing it for free too, you've got to rethink your reality there, right? So we all get paid. Right. You've got to understand how people get paid in order to understand their motivation. That's why we're fiduciaries. We put the client's interest first at Asset Preservation Tax before our own.
Right.
We're not allowed to receive commissions from any sort of securities vendors. We don't get paid by mutual funds or ETFs. We are true fiduciaries, fee-only fiduciaries.
And by law and license, that's what you have to do. You always have to protect your client.
Yeah, we're not even licensed to receive commissions. It's one of those things where, do you really want to put this thing in front of advisors, give them this license to be able to receive these backdoor commissions? don't put your hand in the cookie jar there. Do what's right, and it'll all work out.
And your clients are getting value, so they truly expect there to be some fee involved.
Absolutely. So all of our fees are very clearly stated on our paperwork. There's no surprises. People, don't get me wrong, people, when they see a line item for fee, sometimes they say, oh, I've never seen that before. Mm-hmm. Well, it's because it's always been hidden inside your mutual funds or annuity products or whatever it is that they're selling you. The reality is everybody makes money in the industry, or at least they charge fees, in this industry. So it's important to disclose it, to know how much you're paying and what are you paying for. So oftentimes what we'll see is clients will have the same mutual fund or same 10 mutual funds for a decade, and they're paying these fees. The question is, if all they're doing is letting it sit there, why would you pay a fee for that? There's no advice being given if there's no changes being made to adapt to the situation.
So what's the value in that?
I don't see a value, really. I mean, sometimes it's better to do it yourself. If you're why pay a fee when you can do it yourself? But if you really want guidance, if you think you need guidance, I think hiring a fiduciary really is the first step that you need to take when making a financial plan. But besides the market advice that you're getting, it's important to make sure that there's a real plan in place that extends beyond performance, right? Performance is great. It's important to make sure your money manager does what it's supposed to do, that they're keeping up with the markets, that they're not losing as much on the way down. But what's even more important for us locally, and I think where we do have a pretty big market advantage in Arizona, is our tax office. We do amazing tax planning work, right? We do cash flow charts for our financial clients. We will cash flow out for the next 20 years, all of their plans. We know with absolute certainty what they're going to end with if these assumptions bear out. And if things go bad, you need to have a contingency plan as well.
And I'm sure you do that.
Absolutely. We've always got to have a plan in place.
You always got to have the plan. Well, let's talk a little bit more about fees.
Yeah.
How high are some of these mutual fund loads in percentage terms?
Well, so we've seen some pretty interesting things lately. Some of the big box brokers here, some of the banks, for example, have these services that they'll call you an enhanced client or a private client, and that really makes people feel good. But what they're not seeing is the extra 1%, 1.5%, 2% in total fees that are built into some of those mutual funds. And then when it comes to annuities, for example, annuities are a whole different world. Some annuities are phenomenal. Some are horrendous. And it's really important to make sure if you decide that, hey, we're going to have an annuity, that you know what you're paying internally for it. And with some of the variable annuities, we're seeing 3-4% fees. We're seeing fund fees, mortality and expense fees. We're seeing income rider fees that typically offer no benefit for many of the people that pay for it. So if you take a look from 2000 to 2012, the market made nothing, the S&P 500. Then you add a 4% fee on top of that, you're down 48% in the market when the market's flat. Just think about it. It's really easy to disguise those extraordinary fees during a 10-year bull market. Now they're starting to become exposed because if the market's flat or going downward, those fees don't go downward. Those fees they stay exactly the same. So I think it's really important to have that transparency to make sure your advisor works for you, not just for himself.
Stewart, let's take this opportunity to open up the phone lines. You're going to offer the viewers.
Well, the first 10 viewers, okay, I'm going to make that clear. The first 10 viewers that call in, we'll give them a complimentary in-office consultation with a complete financial plan here and portfolio analysis. So it's typically a $2,000 value. For the first 10, we'll do that complimentary, absolutely.
We're going to take a short break, and when we come back, we'll have more with Stewart.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
We're back with Stewart Willis. Stewart, before the break, we were talking how to reduce hidden fees in your portfolio. I have another question for you about that. How does this impact your wealth over years and decades with these fees that you have that you're paying in your portfolio?
Well, they're a tremendous impact, especially the hidden ones. When you sign a contract and you realize, hey, they're charging me X percentage for doing this, well, you know, you're an adult. You've agreed to something, right?
Yeah.
But where I have a real problem is when you have these hidden fees, when there's things in there that you didn't know about or weren't properly disclosed to you. Times are just different now. A lot of people that are holding on to these funds that they've had for 5 years, 10 years, 20 years, the world has changed. In light of the fiduciary rule, products have just gotten better in general. And if you're holding on to some of those older style accounts, they generally haven't kept up, in my opinion, with the proper fiduciary rules and practices.
Well, and yeah, that makes perfect sense. If lots of the rules have changed, and you just have to be, and you're right, you sign up, you know when you're having someone manage your money, you have to expect for them to get paid, and you're going to offer them value in return. What kind of fee structures work with investing, and what do you typically charge with that?
Well, so fee structures vary greatly in the industry. We see people charge on the fiduciary side anywhere from 0.5% to 3%, depending on what they're actually providing and so forth. I think the reality is that it's most important to just make sure that fee is understood and that it's clear, and then you're actually getting something for it. Right. If you're paying for something that you can get for free, there's no real value, is there? You know,
right.
So oftentimes we have clients that will have this Honeywell stock. We have a big Honeywell contingent here in town, and people just want to hang on to their stock. Or Lockheed Martin down the street from our office here. Some people say, look, we love the Lockheed Martin stock. We want to keep a portion of it. What we're seeing also is people charging fees for things that are just sitting there. And that's one thing we refuse to do, is to charge fees for holding assets that aren't intended to be traded or managed. I'm just not comfortable charging a fee for doing nothing.
All right. Let's take a minute to talk about how people can get in touch with you.
Sure.
Say, I've been to your website, it's very well done, so they can obviously get in touch with you in that respect, call the office, maybe set up an appointment to come in, talk with you, and get a plan in place.
Yeah, absolutely. We're available 5 days a week. Typically, we make Saturdays available as well for the clients that are still working. This is obviously a different time. It makes it easier now with Zoom conferencing, so unfortunately, I think they're gonna, I'm gonna probably have more Saturdays available, even if I'm at the house there. I might be poolside, but
we can do a Zoom call, right?
If not uncomfortable with me being in my pool attire, I'll answer the Zoom on Saturday as well. No, we're available 5 days a week. It's super easy to reach us. You can call us at our office number, or you can call us at info. If you want to email info@apsitaxes.com is a good way to reach us as well.
All right, that's great. Well, let's keep on with how to reduce those hidden fees in your portfolio. How do I know as a consumer if I've been overpaying for fees?
Well, the best way to actually know is to say, look, first of all, realize a lot of people don't want to know, right? They take that ostrich approach and just say, hey, you know what? I don't want to have any sort of bad perception of the advisor that has been taking care of me for the last decade.
Right.
And I am not trying to assign any of that blame, but the first thing to do is to do an in-depth portfolio review to make sure that oftentimes it's a 70-page analysis that we do, and we spend a good hour reviewing all of those fees. But it's important to bring in statements. It takes us 24 to 48 hours to produce the analysis there. Our analysis team at Foundations is unbelievable at turning around these really, really neat portfolio analysis reviews. We have CFPs on staff there that will do a full complimentary plan for our callers here today. And you just need to know. You need to dig deep and really have someone show you what those are. And don't be afraid to see what's behind the curtain.
Yeah, because you do need to be informed.
Absolutely.
You can probably lose lots of money if you're not informed, right?
That's it. A lot of people just want to ignore it right now. I think it's really important to take an active role in your wealth management.
Yeah, I think that is something that I've heard a lot of people say, friends and people that I've worked with. At this point in time, they almost don't even want to know what happened because they're afraid to look. So how do you guide people through, not only with fees, but with what's happened with the market and with their money, and they think, oh my gosh, I don't want to look, because then it's real.
Well, you know what? It's funny. We actually have a lot of technology that lets them know where they are, whether they want to look or not. We send out a weekly report showing them their performance. It's really important, to give people a sense of comfort that, hey, we're watching it. It's not just you on your own. You're not paying us for doing nothing.
Right.
We're here to oversee all of the risk that you're taking, and to really know that we understand the risk that you're taking because we communicate enough with you to make sure that that's properly addressed in your plan.
And that's something that you at Asset Preservation, Tax and Retirement do so well. And and all of your clients appreciate it, and that's why they keep coming back to you.
Yeah, we've been in business for a long time now. We're not going anywhere. We're really kind of we're bringing some very advanced planning to the west side of Phoenix that most people there aren't used to. It's funny. We have clients that will drive from Surprise all the way to Scottsdale for a financial advisor, but the people from Scottsdale won't make their trip in here. It's because there's a perception that the real planners are in Scottsdale.
Oh.
I'm comfortable going up against any financial advisor in any market because most of them don't have the resources we have. We've had nearly 2 decades to build this company into this amazing place where we are not a great fit for everybody. Some people don't like me, and I get that. And I think it's really important that there's chemistry there. So if it's a forced interaction with you and your advisor, it's not really good. It's time to move on.
Yeah.
And I tell my clients that as well. You've got to be comfortable calling and talking to me and letting me know what's going on in your life so I can make the adjustments necessary to match your portfolio with your feelings.
Well, and they trust you. They like you and they trust you. So you want to work with people that you like and trust as well.
It's essential.
It is.
Yep, absolutely.
For good business practice, definitely. Well, is it possible for our viewers that they could be invested in a more tax-friendly strategy, which is really just a fee?
Well, it's interesting. Tax-friendly strategies are oftentimes these kind of prepackaged, generically created marketing pieces, right? We take a different approach to it. We want to make sure that through a cash flow analysis that we do for our existing clients, and now that is, there's several hours of work that go into putting that together. And when I say several, many hours of work that go into cash flow modeling that we do. But people want to know, what are we doing? Where are we going to be 10 years from now if things go poorly? What if they go well? And the nice thing is that we can play with our scenarios, different rate of returns, different downsides, et cetera. But I think it's really important to know that, that if you're paying for something, you want value. Super important. And I think a lot of people are paying for benefits. Like, for example, when someone comes to me today and says they've got an annuity that guarantees a 7% income, just remember, income is not interest. And they're conflating the two words, right? It's a little sales trickery when people are saying 7% income. Well, here's an example. If you have a 5% income guarantee on a product, just remember the 10-year Treasury today is paying 0.7% or so, right?
Yeah.
It's the lowest interest rate in history right now. How are they going to pay you 7% when the market's only paying them 0.6?
Stewart, let's hold that thought a second, and let you tell our viewers what you're going to offer our next 10 callers, and we'll continue with what we were talking when we come back from a break.
All right.
So at this point, the next 10 callers are going to receive what, Stewart, if they call
The
in?
next 10 callers will receive a complimentary analysis of all of the fees in their portfolios with a complete portfolio review as well. That's if you call 833-652-7829. Remember, the first 10, and if it's busy, there's someone else calling in, just try and try again. We'd love to see you.
We're going to take a short break, but we'll be right back. Don't go anywhere.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Thanks for joining us again. Stewart, good to be back with you.
Great to be back, Wendy.
Stewart, let's talk about solving your retirement income gap. Exactly what is a retirement income gap?
Well, a retirement income gap is the difference between the income that you have and the income that you need.
Okay.
And if it's deficient, that's what we refer to in the industry as a retirement income gap. And it's super important to make sure that that income gap is appropriate with your current situation and your goals. I think the one thing that we see very often in our industry, in the financial planning industry, is that, we see a lot of income planning that is just really a guise to sell certain products.
Right.
And I think it's important to not tailor your sales practices with necessarily some sort of strategy, some sort of product. They need to, you need to make sure that you look at the client's interest first. And when it comes to retirement gap, it's really important to understand all of those pieces that make up for that income strategy. So for example, you want to look at any pensions that are there, any 401ks, Social Security. It's really important to know when to take Social Security. Do you take it early? Do you take it late? And what we're saying is these canned approaches where people will say, it absolutely makes sense to take it at 66 or 62 or 70. And the reality is, what's good for you is not good for everybody.
Right. Everybody's different.
Everybody's totally different. And while some of these marketing organizations will teach you to, hey, you need to delay. Well, no, sometimes, honestly, for some people, it makes more sense to take it early.
Right.
For some, it makes no sense at all. And what I see the biggest mistake in retirement planning, we are in the golfing heaven of earth here in Phoenix. And these golfers will get out there, start jib-jabbering with their friends, and they'll say, hey, you have to take it at 62, right? You have to take it at 66. And I'm making 24% on my portfolio, aren't you? And you got to stop listening to your friends when it comes to that stuff. It's important to have professional advice. You know what? Go enjoy a nice round of golf with them. Just, when it comes to finance, just know people are talking. They're just talking. But it's important to make sure you make an informed decision. if you're going to take Social Security early, just know what the impact is. You're an adult, right? You can, so long as you understand and you're making an informed decision, then that's okay.
Right.
That's what's important. Just know what the implications are going to be if you take it early or late. And there's no right or wrong. It's just about making an informed decision.
When, in your opinion, would be a good time to take it early for a person?
So oftentimes when we see dual filers, married folks, and one of them is a higher earner and the other one's a lower earner, sometimes if the lower earner can take it early, for example, it makes way more sense for them to take it early if that will allow us to delay the bigger benefit down the road. So there's tons of different scenarios that we can put together, but what's ideal to get the most benefit you can of your lifetime may not actually be the right thing for everybody, right? Because if you're having to go eat dog food to live up to my financial plan, that doesn't really do anybody any good, right?
No, exactly.
You really want to be able to enjoy retirement, have a good time, and just know that, hey, we're on track here.
Well, 50% of Social Security, or 90% of Social Security recipients don't get exactly what they're entitled to. How do you help? Do you help your clients know what they're entitled to with Social Security?
Yeah, that is the first step. The first step we do is we take a look at if they've already filed or whether they filed or they haven't yet. We make sure that they know exactly what they can do to optimize their situation. And sometimes there's clawback allowances where you can undo what you've done already, and there's some ramifications to that. You just want to know everything you're entitled to, and the implications are substantial. Oftentimes, between a couple, you'll see $1 million in benefit over your lifetime in Social Security. So, don't you think it's important to make a plan for that as well?
Exactly, and you'll help them with that, won't you?
Absolutely.
Well, Stewart, it's been great having you on the show. We're going to open the phone lines up. Give us a call at 833-652-7829. Stewart, you're still going to offer the complimentary, what plan was it that you were offering our first 10 callers?
The complimentary portfolio analysis, and we will give a complete fee analysis built in there as well.
That would be great. We've got a lot of calls coming in, but just continue to call because someone will pick up. It won't take long. Stewart, it's been great having you on the show. We look forward to having you come back.
I look forward to next time.
That would be great, Stewart. Thanks again for watching, and you all have a great day.